Monday Money Channel here, and today we're going to talk about moving average. Even if you're a complete beginner in trading, you must have some across the term scalping. At some point, the main goal of scalping is to make the profit through buying or selling an asset for a very short period of time and closing it for a small profit. However, you should be aware that this trading style will demand a certain amount of time and concentration. And if you are able to dedicate a few hours a day to this, then this first minute scalping strategy might not be the best fit for you. Now, for this strategy, we will rely on the exponential moving average. A single moving average gives you a general trend of the price movement. However, a lot of traders typically use two or more moving average to gain a better feel for main direction and to trigger more precise entries or exits in the market. That's why we will use a trio of moving average to monitor the short, medium, and the long-term trend of market, and will allow us to estimate the trend's intensity for multiple time landscapes. So, however, we have 1 minute chart of Euro USD, which displays 3 exponential moving average. Moving average, the 50, 100 and 150 period average. The 50 period average EMA gives me the short-term trend. The 100 and 150 period EMAs give me the medium and the long term of trends. Of course, this is my preference. I prefer to use longer term EMAs to try to eliminate the inevitable market noise. Any number of period combinations can be used depending on the type of the setups you're looking for the time frames you are training, so feel free to use other moving average. You don't have to use the same exact setup. Looking back at this chart, notice that the price push above the 3 EMAs and trades steeply higher, the price staying above the 50 period EMAs, the entry time. The fact that all 3 EMAs were trending higher and around 45 degrees angles during the evidence was very bullish. This is the image we will search for our chart. Meanwhile, meaning all 3 moving average in agreement in line, almost parallel with the strong trend consistency, right? There, the price eventually broke below the 50 period EMA, which signals short-term weakness. But bonus of the 100 period EMA before resuming the uptrend, thereby confirming the medium and the long-term strength until the price breaks below the 150 period EMAs. The bullish trend will remain intact. After we identified the main direction, we will need to wait to the pullback, so we will search for the pullback trade to profit point under value and overvalue entries into establishing trends. So our goal is to find the opportunities when prices in consider overvalue or undervalue, as this presents exact opportunities to buy low during the uptrends and sell high. During downtrends, the idea of the pullback trades is to buy the market at the discount during the uptrends and sell the market at the premium during the downtrends. The goal to the pullback trades is to take advantage of the situations when the price is the estimated trend, entire bullish or the bearish. And all the three moving average are indicates the same direction. Any pullback to the first or second EMA offers a buying or selling opportunity back in the direction of the established trend. This setup is effective because it forced you to buy below value and sell above value while keeping you discrete to the existing trend. Now, how to enter the trend? So the first step is the most important one, is to identify the current trend of the market. I know I am repeating myself, but I want this to be crystal clear. All three MAs must be trending in the agreement in the bullish or bearish range. Ideally, you want to see all the MAs trending at the 45 degree angle, which identifies the strong trend. However, any slope running from the 30 to 60 degrees will work just fine. The second step involving waiting to the market to the pull back to test enter the 50 or the 100 period EMA price can be closed beyond the 50 period EMA, but the generally do not want price to close beyond the 100 period EMA or be near the 150 EMA wants price. That's easier to move average. We need to the price confirmation. The entry is triggered when the price goes back into the direction of the current trend beyond the 50 period EMA. How to make the trade? There are the many existence tactics that can be used for the pullback trade. Before you select your type of the exit strategy, you should first remember you are the scalper. The room for error is extremely small. Let me repeat it. Margin for error is very small when you are trade with a high level while looking for a small profit. With that in mind, there's what I do when I am scalping. I move my stops to the breakdown as soon as possible. You want to dismiss your risks. You will get to stop out of the lot of the breakpoint. But from my experience, it's better to have 5 trades in a row with 0 profit than 5 losing trades. That's the ugly face to the scaffolding. It's very unpredictable and any price swing can hit you to stop loss. That's why I look to the play in the break-even trade when I am 5-6 pips of profit. You will be a percentage when you will have 5 pips of profit move you. Stop breaking and then will hit your stop loss and will continue in your internal direction. It will happen, but this will protects you to the long run. If you have the bigger risks aberrations, there are other tactics you could use. A traditional trending profits fixed profit target exists the next support of the resistance level of the bit extension if you trade with the fib numbers. This chart is illustrated the perfect example of the choosing the currency pair during the established trend. Notice that all 3 MAs are trending over the 45 degrees angles, which is important because this is the measure of the trend intensity. Trading is the direction of the establishing trend. Increase your chance for the profitable outcome now that direction has been established. We look to the price to the break above and the 50-day MA in the order to set the stage for the sell. Scenario: once price dips above the first MA, we look to the price to the close back below the 50 periods average in the order to trigger a long position which occurs several times. In this chart, also remember that you can use any period moving average you like to manage your trades. You could backtest different settings and depend the period of the MAs to fit your style. Once in the trade, I'm Immediately set my loss. Stop below to the wall of the pullback I am trading. Therefore, your stop loss would be benefits. The low of the bar that tested the 50 or the 100 period AMA. There are other examples of the Kaplan trades on Euro USD, DAX index, and the Dow Jones index. My favorite instrument is Kaplan. So, what's the physiology behind these trading techniques? Well, we will try to take advantage of the noticed trades shorting the market below 50 AMA. Think about it. We are practically waiting for the price to close below the 50 AMA, but other traders, when they see the price closing below the AMA, they immediately short the market. They don't care about the general trade. They see the price below 50 AMAs and enter short. That's why we will wait for the price to return above the 50 AMA. We want to have the trapped traders below us. To fool our long positions, where are the stops of the traders shorting below the 50 EMA? Do you guess it? Above the 50 EMA when the prices returns above to the moving average? Our scalping trades gets the extra boost from the stop of the trading trades. Now, here are the important observations. Kaplan can easily turn gambling exciting traders on the waiting sticks will abandon their own rules in the pursuit of fast money. If it happens once, it can easily happen again. Being pushed in is one of the most unpredictable trades for the Forex Kaplan. That's why try to improve your disciplines and self-control. Before attempting Kaplan, second Kaplan is one of those training methods that are often performed with the risk-reward ratio. Trade will often risk 100 pips just for the possibility of gaining 1 or 2. Market provides plenty of opportunity to enter high probability setups that can make these rewards sustainable. Unfortunately, this trading style also means that the days and weeks of the profit can be wiped out with the relative else. Few bad trades in a row can therefore produce substantial losses. That's why we will aim Kaplan. I am not squeezing more than 0.5% of my total balance. Not 5%, but half of the percent. So if you have the $5,000 in your account, for example, if you Kaplan risk almost $25 per trade. My third recommendation: lower your lot sizes. Small lots helps you keep losses until down. Your trading improvements and it's consistently profitable. The smaller the forex lot size, the lower risks. Also, don't neglect the trading costs. Kaplan requires frequent trading almost by the definition. Frequent trading also means frequent and substantial position entry costs. Small difference in the spread between the Greek broker and the good broker may be the difference between the consistently winning strategy and the consistently losing systems. If you find the value, consider subscription to our channel and hit the bell icon so you don't miss out when we upload a new video. And also don't forget to leave us a like to show your support. Until the next time.